Okay, hello everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, April 5th. Michael Boutros here with you guys. Good morning to David, Eileen, Francis, Graham, Hussein, Mark, Pete, Pooja, just to name a few. Great to see you guys here this morning. So, lots to cover. Tabor, same to you, my friend. As always, guys, feel free to throw out any questions, trade setups. On the back of yesterday's RBA interest rate decision, I am kind of still focused on some of the Aussie crosses, specifically Aussie dollar and Aussie yen, both of which broke some pretty significant levels we were looking at last night. So the near-term focus on both of those we'll review in a moment, but they have sunk below some near-term support targets. We also want to cover dollar CAD and crude, which is sitting on major support, namely that 100-day moving average. Euro pound we'll just touch upon as well. And as always, guys, feel free to throw out any questions or specific pairs that you guys want to cover. Oh, Cad Yen. Can't forget about Cad Yen. All right, our list is complete. Let's jump right in. So, first things first, relative performance on the U.S. dollar heading into the U.S. session looks like this. You know, we have the dollar broadly stronger against most of its major counterparts. The yen with some strength that's helping that Cad Yen position. And certainly with our expectations, as we noted on Sunday, guys, looking for that dollar rally that strengthened the dollar early in the week, and we're getting just that. So as far as the dollar index is concerned, remember, your opening range high for the weeks or for the month essentially so far is still that 11,940 level. Bearish invalidation still sits unchanged at 11,965, 11,970. And this is still going to be our bearish invalidation level. So heading into Tuesday, Wednesday, wouldn't be too surprised to see another spurt higher here in the index. Again, a rally into this region would have us looking for some short-term short triggers in momentum. Here's what the 30-minute chart looks like for the dollar index. When we take a quick zoom out, you can see where we've been sitting here. Last week, we were talking about this. We broke out looking for a move higher on NFPs. We got that move unsettling as we came right back, sort of recouped more than pretty much 3/4 of the advance on the back of the NFP number. And here we are with a slight drift higher. Now, technically, this has broken the highs from early in the week. You're seeing a slight pullback here. Long story short, as we said on Sunday, nothing's changed. We're still looking for a decent rally to get some resistance or to look for a short trigger higher up. So we'll be on the lookout for this on the U.S. dollar as we get into the trade session here in the U.S. Not much on tap as far as data is concerned. You do get ISM non-manufacturing composite, which is the print for March at 10 o'clock. It's probably going to be the biggest read today, guys. We are looking for a print of 54.2 from 53.4. Again, ISM 50 above 50 indicates expansion, sub 50 contraction. So pick up there in non-manufacturing expected at 10 o'clock. So where does this put us on some of the dollar crosses? Well, first things first, I do want to cover yesterday's Aussie dollar setup, and certainly on the back of the RBA, we're already coming into this major key support for the Aussie. Here's what it looks like. Excuse me. Okay, so from the dollar chart on the Aussie, the main thing that you wanted to look at here heading into the release was the fact that you were pushing back below that April low day close. Note that that April low day close, which came in right on 75.90 right here, this is also the high day reversal close that you made here the previous month. That close came in right at 75.76. So you're looking at a nice confluence region of support. We closed just above that yesterday. There was the push post RBA to move lower. You're now checking the median line coming right off the highs. And this is a proposed median line, guys. Don't forget. We don't have any pivots. We don't have any inflections off this structure just yet. Certainly today, it looks like that median line at this point is offering some support. Also taking a look at that support trigger we were looking at yesterday. And as I said in the report, today's close is going to be important. Specifically, if we close below 60, specifically below that trigger support, would suggest, again, near term, you're at risk for some further pullbacks here in Aussie dollar. Here's what the near term chart looked like right ahead of the release. Some median line action here off the highs, was just holding a very nice slope. Okay. We were testing that support, got a little bit of a bounce into the RBA interest rate decision, obviously got a spike higher, and I was looking for a rally into this region. We didn't quite get it before failure took us right back into critical support, 75.60, 75.50, and a break below there really solidifies the downside. Now, near term, again, you're at slope support, so immediately from here, heading into the U.S. session, you could see some upside. Near term resistance, former support, 75.50, 75.59. And by the way, the importance of these levels, just to indicate to you guys, you have basic trendline support off the low from the 16th. This is a 4-point trendline support. 1, 2, 3, 4 tags gives us clear validation on using that structure. It also coincided with an exact 100% extension off the highs and the swing low that you made right here on the 22nd, and that's going to be that 75.50 level. So below this region, you're at risk for further losses in the Aussie dollar. You know, as far as the commentary that came out of the RBA, so we didn't hear anything with regards to necessarily concerns with the broader global economy, but you did see the RBA say that Aussie dollar appreciation could complicate the economic adjustment. It says that low inflation would provide scope for easing policy, and says inflation likely to remain low over the next year or two. Very similar to the comments that we've heard from the Fed, but certainly on the back of this interest rate decision, leaves the door open for further interest rate cuts. I showed you yesterday on the report where the futures, where the overnight indexed swaps are trading. And certainly you can see that there is expectations building into September as early as August to see an interest rate hike, 53% chance probability, or excuse me, a cut that will see the RBA cut interest rates by 25 basis points as we head into the latter part of the summertime. So a look at that here today looks like this. Okay, now here are the updated futures projections. And again, the overnight index swapped, which is basically their Fed futures funds, is now factoring in, September popped up to 70%. Okay, so we see a slight adjustment here. It actually reduced the likelihood that we'll see that August print, and it brought it up to July. So now July showing more than 52% likelihood that we'll see a cut from the RBA. Again, this shift, guys, in the interest rate outlook is what charges these moves. And certainly on the back of what we heard, not surprising to see that shift. And again, even on the outskirts here, heading deeper into the year, December, November, you're seeing those start to pick up for, again, possibilities of further interest rate cuts. Remember, they're at 2%. So if we go to the 1.75, a 25 basis point cut, again, that would be expectations for the first one heading into July. So what does this all mean for the dollar? Again, we don't want to, for the Aussie dollar, we don't want to necessarily be sitting here looking at interest rate expectations, but just goes to show you that that move, that shift in broader market consensus is really what's driving the price action here. So now that we've broken this key level, like I said, look for a possible rally here into the U.S. trade session to offer a favorable short exposure. If we do break back above 75.60, no longer looking for shorts. Okay, we'll discount that, and we'll look to see if we can pivot back above into that 76 region. Long story short, near term, looking for a move higher towards 75.60 for a possible short. Downside targets unchanged. 75.10 would complete a basic 236. And then the longer dated 50% retracement comes right in line with last week's low, and that coincides with a clean 1618 extension off the high into 74.80, 74.82. Any questions on the Aussie before we move off? Hey, Minho, great to see you. Amir, can you go through sterling yen with the potential long? Yes, Amir. Good thing you reminded me. Sterling yen. Let me jot that down. For sure. Eileen says, where or when you were watching for Aussie dollar last night, where would have been a good place to start looking for entries timing-wise and watching price action and spike reverse. Let's take a look. Let me bring up that 5-minute chart for you, Eileen. And there's my man Cad Yen. Keep going, baby. Okay. So, as you know, Eileen, I don't need to tell you, but these interest rate announcements are always the trickiest, the most difficult to trade. Here's the interest rate announcement here for the Aussie dollar. Now, like I said, with these announcements, it's not always going to be an easy NFPs are better, sell, NFPs are stronger, or whatever the deviation is, and react to it. With the interest rate decisions, it's all about the rhetoric. And I tried to warn you about that last night, guys, and the fact that mostly the rhetoric is really what's going to be driving things here, specifically with interest rate expectations so muted for what we're going to see. The emphasis really becomes on what the central bank is suggesting. And certainly the commentary left room for further easing. It set the precedent that we're expecting to see inflation remain low for the next year or two, and specifically cited appreciation in the Aussie as something that could complicate things. And this is the exact jawboning I'm talking about. Just earlier in the week, you saw the RBA board member, John Edwards, continuing to cite the 65 handle as an appropriate level for the Aussie dollar. These are things and commentary that's leaked just to give markets pause on continuing to push the Aussie higher. Okay. If we remember, for those of you who've been with us for a while, Wheeler from the RBNZ, the Reserve Bank of New Zealand, he is notorious for this kind of jawboning and talking down the currency. Certainly, we've seen Glenn Stevens from the RBA do that as well. But these are just attempts at just that, guys, talking down the markets. Certainly, if they leave policy scope for further easing open, that's really going to propagate the decline. So long story short, what I mean to tell you, Eileen, is this. On a release like that, where the commentary is dovish, by all counts, and you see the Aussie rally at first, that's your indication right off the bat that we should be looking to fade the move, right? Yeah, they didn't cut interest rates, but we weren't expecting them to. But they left the room for further easing open. They've continued to talk down the Australian dollar, and specifically all the things that we said that we were looking for came out in the commentary. So Eileen, on a move like that, it's a gut check. I mean, I really can't tell you that there's going to be a clear technical indicator to put you in that trade. Honestly, like I told you, I was looking for a rally towards this region. I even highlighted it for you last night. I think if we had come into that basic trendline resistance, that nice confluence Fibonacci level would have been a nice entry. We just missed it. And on the pullback was so quick and so sharp that unless you were able to get a 25 pip stop against that high, you really didn't have enough time to get in. And that's okay. Again, these trading conditions on news releases like this are always very, very tricky. So I guess the only thing I would be telling you is heading into the release, there was a trigger that was forming like this. I removed it yesterday just because I didn't want it to cloud my judgment as I was heading in. But the trigger actually didn't come till down here. And 75.92, 75.29 would have been just above the 25 pip ATR that you were looking for. If you take into the near-term price action in the 5-minute, that's where you got another really hard call. I mean, you didn't even have a trigger to work with on this one, Eileen. The only other trigger that you would have seen on the 1-minute chart would have been something like this. And again, that didn't break until about 30 pips off the high. So I don't blame you. There wasn't much to work with yesterday on the Aussie dollar. It was a very, very quick move. And again, on a rally like that, you kind of just need to be a gut check against that high. Aussie dollar definitely would have wanted to wait about the commentary. Yes. So I didn't see that comment earlier. Eileen, it's all about the commentary, especially when there's no expectation for an actual shift in policy. It all becomes about the policy outlook. Okay, what the central bank is looking forward, or what tendencies they're looking to do. And right now, if you look at the RBA, the tendency is that they're going to cut, right? And it's interesting to see this, guys. You know, when you look at interest rate expectations like this, I was just talking to another trader here in New York, and we were just laughing on the phone yesterday. I find it, crazy how we're expecting further cuts from the RBA. The RBNZ is likely to be on hold for a while. Europe's in negative rates. Japan's in negative rates. Switzerland's in negative rates. And here's the U.S. Fed looking to hike rates, right? That divergence in monetary policy is like a precedent at this point and is going to, continue to make things really difficult for the central bank. I don't really know how. Anyway, we don't want to get into it. But long story short, it's a very tough argument for Yellen to be able to justify moving higher on rates with a divergence in policy across the globe at this point. So Eileen, does that help? Again, I wish I had something a little bit easier to explain to you. But on an interest rate decision like that, for me, the comments were extremely dovish. I was looking for a rally into a more concrete resistance. Again, if we had gotten a rally against that guy as a stop, real tight stop against the session highs for U.S. would have been a beautiful entry. Sometimes the market will give it to you, sometimes it won't. Any questions on Aussie dollar? So again, we're going to continue to maintain that near-term outlook. You have to keep in mind that a break above 76 at this point, we're going to lower that bearish invalidation level. This region here is really what would be needed to shift the focus back to the top side. Okay, while the immediate focus now heading into the U.S. session, yes, I am looking higher. For us to start validating buying pullbacks, we would need to get back above 76, and that would basically validate a pivot back above that April low day close. Again, that reversal day close that we made back in March. Well, the U.S. Fed thinks it's the leader to move higher first, Eileen says. There's a train of thought that could go along with what you're saying there, Eileen, but I mean, it's not like a race to see who raises first. It's the impact that Fed hikes will have on the global economy, right? It's not going to help things. And longer the Fed holds off, the more synthetic easing essentially the Fed is doing for global markets. So, I mean, everything's interconnected right now. But that's a topic of a whole other discussion. Any questions on Aussie before we move off? So levels are pretty clean. Look for near-term resistance near 75.50, 75.60 on the Aussie dollar. One caveat I just want to say on this scope, guys, and certainly this is just an if this does end up being some sort of concrete low when we do break back above 75.60, a rally towards our bearish invalidation level, this range right here is something I would be interested in playing, specifically if the close today is back above this region. That's why I really wanted to stress today's close. Also, we'll be watching, again, that momentum trigger here on the daily chart. Okay, moving right along. Aside from the Aussie dollar, yesterday we were looking at Aussie yen, and boy, did that see a big move too. So here's what Aussie yen looked like on the daily chart. It was coming into a very, very nice confluent support. You're looking at the lower median line parallel for the ascent off of that low that we made for the year. You're looking at a former or a current operative slope line here within the broader structure of the decline. I'll show you this in the daily chart in a moment. And a proposed pitchfork, just like on the Aussie. We didn't really know if it was in play yet, but a proposed pitchfork right off the high gave us the median line all right there. Here's what it looks like on the 30-minute chart. Here's what it looks like now. So again, your daily, just to give you a broader view of what we're looking at. So this is the median line formation we've been following off the 2013 highs. You can see all these slope lines of the same slope have been offering some really nice pivots in price. Okay, and that median line right there, which has again offered some very nice pivots, support, resistance, support, support, resistance, was right there. The lower median line parallel and that current operative median line off the highs. So a break there, the first target was 83.18. You probed just lower, 83.04 before rebounding higher. Very similar to the Aussie dollar. You're looking and flirting with a trigger break here dating back to the lows we made in January. And while below 83.90, that swing low from the 15th, you're at risk for further pushes lower in Aussie yen. Here's what it looks like on the 30-minute chart. Here's what we looked like last night. Okay, so very similar situation. As we noted in the report, our bearish bias was in play sub the median line off the highs here. Really, we need to see a breach above that 85.20 level to validate a breakout. We came right into the median line, literally turned just ahead of it. And again, Took out that 83.90, 83.89 target and that 83.20, 83.19 level as well. Very similar to Aussie dollar heading into the US Open, guys. If you see a nice rebound here, you have a multi-day trigger resistance. If we do see that topside break, note you're getting some divergence. You look for a rally back towards that 83.89 level. And again, that's just that swing low that we made for the 15th. And now the same region confluence is there. The median line off the high, the slope off the highs that we made just last week, and that swing low, all right here. Keep in mind the broader structure for the Aussie yen. Let me just zoom this out for you real quick. Again, keep in mind that broader structure. That's what I want to show you. That snapped. That lower median line parallel. Comes in just above that same region. Okay, possible short entries here for Aussie yen. Keep in mind we are working on our 4th consecutive down day into support, so that rebound would be welcomed, at least from my part, for a possible re-entry on the short side. Any questions on Aussie yen? Very similar setup, guys, as far as Aussie yen and Aussie dollar are concerned. And certainly as far as the yen is concerned, it is one of the top performers today, so offering some help on all of those yen crosses. In fact, guys, here's what the yen performance so far ahead of the US Open looks like. This is versus the yen. So you can see that it's stronger than all its major counterparts. Everything is weaker against the yen today. So the yen setups that we've been following, Aussie yen downside, loving it. Cad yen downside, loving it. Sterling yen, we're going to look at that for you, Amir, in just a moment. I'm not really too sure I'm going to be too excited about the sterling yen short for long, but we'll take a look at it in a moment. All right, so go back to the radar charts from last night. We want to talk about dollar CAD real quick, and then we'll jump into CAD yen and sterling yen. Here's what dollar CAD looked like last night. A quick segue before we jump into dollar CAD on crude. This is a chart that we looked at yesterday as well. Remember, we were talking about that support last week at 37.91 into 38.13. We opened the week sitting right there. Break, we talked about that into the close of last week. Here's what the region that we highlighted yesterday, and we're still broadly basically there. Okay, you do have the 38.2 retracement, which we're currently trading below. We do have the lower median line parallel, which technically we are trading below, but that support structure extends into the 100-day moving average. Okay, and that's 35.36 now is basically where we're trading, just above it. So again, a trade where today's close is going to be paramount. A move lower beyond here, you're looking at a last-ditch effort near 34.35, 34.53. This is the low day close for December, and it's a 1618 extension off the highs. Okay, also pretty damn close to the high that you made for February right here. That's on a move below today's low so far. Resistance would really need to get back above that median line, back within the confines of this ascent here to validate continuation. So for crude, guys, I'm kind of hands off here. I don't want to do anything. Wouldn't be surprised if this thing spikes into 34, 35, then reverses. I don't know. But it gives us some pause for what we're doing on dollar CAD. And certainly while the dollar CAD upside bias is still favored, immediately you could see a little bit more of a pullback in that pair before we continue higher. But long story short, the crude levels are pretty clear. So again, for anyone who's new to the room, I see some new names in here. Just remember that you can take a quick snapshot of any of the charts that you see presented on any of our webinars here on SB by just clicking on the camera button in the top right-hand corner of your screen. So if you want to reference these charts at any time throughout the trading day, you can have them at your disposal. Feel free to do that whenever you want. But certainly for crude, gives us some pause, right? Wouldn't be too surprised to see a rebound here in crude here today. At least maybe check this as resistance, if not recover. So where does that put us on dollar CAD? Well, here's what the dollar CAD looks like first on the daily chart. Okay, really clean move. I really can't stress this enough. I'm kind of bitter because I'm not in it. We did take some really nice long scalps off of last week's key rebound off of literally almost to the pip. We were 4 points off the low day close for October. It was also a very nice pivot with that rebound that we made in July and pretty darn close to the highs they made in March. But it all originates from the October low day close. And this is why these high day close, low day close, high week closes, low week closes can be very, very critical areas of support and resistance, guys. Typically levels that aren't really very visible and hidden from markets. So although we had a huge Fibonacci confluence here, and you guys know how much I stress these hundreds off the high, 618 off the low, favorite confluence, guess what? On a close basis, rock solid. Rock solid. So it's a good way of kind of understanding how your analysis interacts with the levels that you're mapping out. Remember, when we're talking about the daily charts and we're talking about these huge confluence regions, it's all about the close, okay? And that's what validates a break or a hold of a major key confluence region. So we never closed below it. The spike, even on just a spike relative basis, right into that low day close and a reversal. So we're looking higher. You're coming up on near-term resistance here. All I wanted to highlight was just the low day close that you made earlier in March. That brings you into 32.14, 32.15. We're approaching that now. Here's what dollar CAD looks like on the near-term chart. And here's what we look like last night. All right, so you're in overbought territory. I don't want to try to fade this, but a couple of things I want to highlight. We just talked about the fact that crude is coming into support. We're kind of sitting on that 100-day moving average, right? So here's dollar CAD with the rally into the key. I wouldn't call it key, but it's a 786 retracement of that decline off the high that we made on the 25th. I guess that's the 24th. And this is a proposed median line. And I talked about this in the piece yesterday. We don't have enough conviction yet. We haven't seen any inflections, but the fact that it's coming right into the confluence is why right now we want to be a little bit more timid on the long side of dollar CAD from this level. If you're holding a long position, what you want to be doing is taking some off here, bringing your stops up, and seeing if you get the follow through into the U.S. Open. By the way, that 32.55 level was last week's open, just to put things in perspective. But it also comes just pips off the 88.6 retracement. Okay, 32.44, 32.55 will be the next level up here on dollar CAD. Eileen says, dollar CAD, look for counter trend shorts triggers off this level. Possibly. Eileen, I like that thought process heading into the U.S. session. What are we going to do with that, Eileen, though? Very important. You're going to reduce leverage, half or a quarter of what you typically trade because it is counter trend, right? And you want to stay as nimble as possible. Really, really pick those entries with some precision. I got no problem counter trend trading, guys. I've told you that before. I'm all about it. There's been, times where the trade desk guys are just laughing at me because I'm just fading every move on a counter trend trade type of day for me. As long as you're nimble and as long as you're disciplined, you want to try to maximize your risk to reward ratio by getting in a very tight stop on those counter trend moves. But yeah, it's just okay. All those, yeah. I mean, if you're gonna try something like that, absolutely. You're at a confluence resistance. The other thing I wanted to highlight, Eileen, and why we might see a little bit more kickback from this region, is basic channel resistance. So we all know this channel, right, or this trendline resistance we were talking about. That's the one that you see here on the daily chart, right? But within the confines of this formation, another slope taken off the high from the 26th of January. Okay, one tag, two tag, that's right here. Why is that important? Could be just a random trend line. It's important because if you took a mirror or a slope parallel of that same slope and connected it to the low, look what that caught. The lows, the lows. Okay, so this embedded channel converges on the median line, converges on the 786 retracement. Yes, I am looking for a possible pullback here in US trade. Okay, as crude is coming into support. That being said, the pullback is to be used just as that. Okay, I wouldn't be looking to target anything sub, 26. 2960, 2980. This is still the bearish invalidation level. So you'd be nimble on the pullback, and especially if you do get a nice trigger, Eileen, we get a 30 drop or 70 drop here in momentum, tack on a quick retracement at that point and play the downside targets. We can't do that now, okay, because we have no way of validating that this is going to be high right now. This thing could open up the US trade session and continue to just fly higher. But if we do, let's say it does come up here, it gives us a short trigger in momentum, and we turn back below, these are the first targets you'd want to be looking for. Again, I wouldn't get aggressive. 34 pips is a quarter of your daily ATR here. The broader trade, medium term, remains constructive. And on a scenario that we do get that pullback, we would be looking for long entries on a pullback in dollar CAD. Any questions? Pretty clear. All right. Now that we've talked about dollar CAD, let's take a quick reference into Cad Yen. And this is certainly a trade that we've been following for some time. The latest update was here over the Sunday Open. We were talking about the support here at 85.51. Really needed that to break. And if you guys look, a quick reminder to anyone who's new to the room, again, if you have any of these links up here, or any of the pairs are linked, this will take you to the latest report that was published on that pair. Okay, so we'll put sometimes pairs on the radar charts that are kind of in focus, maybe not operative just yet, but things we're looking at. If there's a link there, it's going to take you to the more in-depth report that has the daily chart and all the accompanying levels. So just to put that Cad Yen setup into view again, here's what the daily chart look like first of all. Okay, and that 85.50, the break was needed. Momentum turned over heavy on that rally last week into key resistance, 87.35. You had a 618 key retracement also right around that level. Downside targets on this break, you were looking for 85.24. That got taken out. 84.78. That got taken out. The next downside target is 84.30, and we're just shy of it. The low that you made an overnight trade was 83.65. Here's what the intraday chart looks like for Cad Yen. And here's what we looked like last night. Okay, so heading into the RBA, we were checking this slope. This is simply a parallel of the operative slope that we were working with off last week's highs. Downside break, as we noted, you're looking for 84.31. Oh, I'm sorry, I already got that one. The last target, 83.63, right here, is just that swing low from the 8th of March. And we just missed that. The low so far, 83.65. Just 2 pips off that low. But what I wanted to stress at this point is caution. Okay, caution. You're coming up against the lower median line parallel. And that kind of makes sense. All the pictures fit. Cad Yen into support, dollar CAD into resistance, crude into near-term support, right? All the pictures kind of fit the puzzle very, very well. But they're all coming up against some pretty big invalidation levels, meaning if crude breaks lower, if Cad Yen breaks this region, if dollar CAD breaks that resistance, you're likely to see a much more sizable move. Okay, because this is structural support here for Cad Yen, structural for resistance for dollar CAD. Same thing, for the crude trade. Does that make sense, guys? So same exact scenario we're looking at with dollar CAD. The risk is for a near-term rebound here heading into the U.S. trade session. You got some divergence on this low here as price action made a lower low. The oscillator made a higher low. Again, it's important, my responsibility to tell you that these divergent levels sub 30 and above 70 tend to be your weakest signals. In fact, it turns out that the closer the divergent points are to 50, the stronger that signal becomes. So if I had a divergent point where one point was here and the other point was here as price action made a lower low, that's a much stronger signal than having both reference points sub 30. Okay, this just means that the momentum has that much push that it's in oversold territory. So I'm not going to, advocate trying to fade these moves here just yet. We need to see the triggers start to materialize into the US Open, but broadly speaking, Cad Yen at support, dollar CAD at resistance, crude at support. Any questions? Eileen with a good question here saying, for divergent signals, how far back to look when short term? So it's not really necessarily how far back, Eileen. It's the last and latest two dips in price, or the last and latest two spikes in price. So on a move like this, right? Here's your one peak. Here's another peak. This is a decent divergent signal. We talked about this last week. Okay, price action high. The oscillator makes a lower high. Price action makes a higher high. So the most prominent last two peaks in the oscillator. Same thing here. This point and this point doesn't really give you divergence, right? But this point and this point does give you divergence as the oscillator dips, as price dips into a lower low. This is just to get you reference, Eileen, on what's happening in the broader momentum. You always want to bring it right back to the 5 minute and the 1 minute. What are we looking at here? Okay, so now that we're seeing sort of that initial divergence in price, that's when you want to jump into the 5 minute and the more near term charts. And now it gives you further confirmation, right? Now, it doesn't need to be like it doesn't need to be like a trigger in that you need to have multiple touches, but here's the oscillator making a higher high, a higher low, another higher low. Price action has made a lower low and another low. So using the last dips in price in combination with what's happening, or the last dips in the oscillator in combination with what's happening in price is the easiest way to identify it. So on the 30 minute, typically just wanted to kind of jump out at you. This is where it becomes a little bit more operable. And this is where now if you get a topside trigger, it becomes something that's a little bit more of a conviction trade because momentum is turning over into support, which is always going to be your ideal sort of fade move. Does that make sense? Yep, thanks. All right, Eileen, got that. So Cad Yen, beautiful moves, love it. Coming into support, watch for a rebound. Near-term resistance 84.32. All right, so for Amir, was it? Yes, Amir, my man, wants to look at sterling yen. Let's take a quick segue. Amir, before I do, I just want to touch on sterling dollar, and then we'll jump into sterling yen. So sterling in and of itself has been having a rough spout here. Here's what the 30-minute looks like. Nothing's really changed since last week. Okay, and all we've done is made a just complete round trip trade. Here's what sterling looked like last week. And we were talking about the fact that we were marking divergence. This is back from the 30th of last month. We were marking strong divergence into those highs as price action was pushing into a new high. Well, it turns out that that was the actual high for sterling near term. Okay, and we needed that break below 43.50 to get the downside going. You got that late in the week, specifically obviously on non-farm payrolls. You saw the plummet, and we've taken out all the downside targets basically that we noted into the 618 at 42. At this point, here's your weekly open. Okay, the weekly open rallied into confluence resistance. This is a proposed pitchfork. Again, we don't have too many pivots, although the resistance caught last week was rather nice. A 50% retracement of that decline with former support. Now resistance gave us a very strong rebound to move lower. And now we've simply made a round trip of the entire weekly opening range. So for me, on the pound, let me just snap these levels for you. So for me on the pound, excuse me, if we get a break of last week's Friday low, if we confirm a break of the weekly initial opening range low, I would be looking for a move towards 41.40 and then that confluence support here. Again, critical. 618 retracement of the advance. the lower median line parallel. Former or current, operative median line off the highs, the broader one from the daily chart, all coincide down here, guys, at 40.94 basically. Right here. So I do like the broader picture for sterling's strength, guys, moving forward. But from right here, if we do get a drop into that low, I'd be looking for possible long entries near 40.94. It's a pretty same picture that you're seeing on the daily chart here. So sterling lower than higher before we start to rally, and key support 40.94. What would put me bullish again? It would need to be a break back above 42.80. This region right here. Okay, we need to get it back above that upper median line parallel, a basic 38.2 retracement of the decline, and that would shift my focus back towards 43.15, 43.50, and so forth. All right. Any questions on the British pound? So for Amir, sterling yen, my man, looks like this. Haven't really been tracking it quite as close. But with the strength that you're seeing in broader yen move today, with the weakness that you're seeing on the pound today, not too surprising to see this thing break that low that we made late last month. Now you're looking at the 50% retracement, 156.35. That's a long-dated 50% retracement from the advance off the lows you made in 2011. So a multi-year retracement, big pivot in price. That's coming up just from where we are right now. Amir says, hi, Mike, can you go through sterling yen, what the potential long entries are? Well, like I said, 156.35 is a level I'm looking at. I know that Jamie's looking a little bit higher from that on support. Let's see what the near-term chart looks like, shall we? Let me update this for you, Amir. Okay. So a couple of things. First of all, you're actually at support like right now. So this is a 100% extension from the decline off the highs, okay, from the high of March. And this is a 764 retracement from the advance off the lows. So a nice Fibonacci confluence. Add to that there is a slope line, the current operative slope that we're working with here, that has caught the lows, basically, that we made just now. Irrespective of the fact that this is a parallel of this slope, irrespective, it's just basic trendline support, guys. 1, 2 tags. If you just discount that pivot, that's 3 tags. That's basically where we are right now. Now, the fact that it's the same slope as the operative pitchfork here adds validation to it, but you're at support. Amir says, Jamie is broadly super bullying on the sterling in April. That's why I think to take advantage of the dip on the sterling yen, just gathering ideas before I decide, yeah, Amir, you're in the right place. And I'm with Jamie as far as sterling strength. I just told you that, right? I do like sterling strength moving forward. Just on as far as the yen is concerned, we want to be careful, guys, not to extrapolate a singular bias versus all of the pairs in the spectrum on that pair. It just doesn't always work that way. And on a day like today, where you see that the yen is stronger than all of its major counterparts, if I'm going to look to fade something, I might not want to fade the strongest one of the day. So while I am looking for sterling yen strength, I would need to see a trigger down here. I think would be a beautiful entry. If we can get some sort of near-term trigger. Remember, this is a wider range ATR, about 47 pips is a quarter of the daily ATR. But you are getting some divergence into that low. So Eileen, here's a nice, again, just a nice drill. 2 point, there it is, higher, low. Oscillator's making a higher low. The price action is making a lower low. Always remember, if you're having trouble identifying divergence, bring it into a line chart. Okay, that'll always make things easier. And there's your reference point. Lower low in price, higher low in the oscillator. You know what? This might actually be a decent position from here, Amir. Let's take a look at the 5-minute. Okay, a couple things I don't like about it right now is, you have a support trigger right there, is the fact that 60 held as resistance like a rock here. Okay, remember the same tendencies that we look at in the medium-term charts, guys, the same type of tendencies we want to kind of consider in the near term. Meaning, in strong downtrends, momentum should really find some resistance at 50, if not 60. In strong uptrends, momentum should really find support near 40. So if you can see that we broke from sub 40, we found resistance at 60, but now we're holding 40 as support. Suggestive to me that you might see a little bit more chop here, maybe even a dwindle lower before it does make a near-term correction higher. But I do like this region. The major key region of support, I would still point out, is going to be that broader 50% multi-year retracement. Just below that, Amir, you also have the low day close for the year. Whoops. Okay, so that's the 2016 low day close right there. So I'm still going to stress that 56.18, 56.35 region is major, major support. But as it stands right now, if it makes a move off this, sure. If you break the, let's see, European opening range highs at 57.32 would be a near-term trigger for correction here. If that scenario does materialize, by the way, just for my scalpers here, you want to take a quick retracement off the high. Can't do this now because I don't have any validation that this is a true low, but if it is, a basic 236 takes you into the 58 handle as just an initial target. Okay? If a correction higher, what's the potential resistance, Amir? You got it right off, my man. 158. 158 is what I'd be looking for. There is a soft pivot I have at 57.60 here, Amir, but 158 would be sort of the initial level I'd be looking for. Yeah, this is just a soft pivot. Look for that 58. He says, thanks, super clear. Right on, Amir. Cheers, mate. Thanks for bringing this up, actually. I haven't been looking at this for the last day or so. I remember looking at this early in the week and really stressing that level, but now that we've broken, this is pretty big. Again, retracement off the low, extension off the high, slope line. See if we can get some turn in momentum as well. On a scenario where we break, by the way, if it does break the lows that we made in Europe, forget about it. You're looking at targets at the lower median line parallel, but more than likely you'll see a run into that 55.80 level, which was a nice pivot in price back here in February and also represents an 88.6 of that advance. Pretty interesting levels here on sterling yen. Okay. Went over Cad Yen, sterling yen, dollar Cad, euro pound. I just want to touch base on because again, that looks like it does want to make that final spike. Remember, we talked about this in the webinar yesterday on Daily FX. Remember, guys, the Monday webinars are public webinars, free for everyone on Daily FX at 8:30, same time. We touched upon this yesterday, and I put this in the radar charts on Sunday. 80.60 is still sort of my dream spot. I don't know if we get up there, but the thing is definitely at risk for a pullback. Eileen, yet another example. I'm going to keep drilling this now that I know that you're looking at this stuff. Not the cleanest as far as a trend line is concerned, but lower high, take the same reference points, right? Higher high, higher high, higher high. So the divergence signal that you've been seeing on the daily chart since the start of the year essentially has continued to really threaten or give you pause to the fact that the momentum on the upside might be waning. Add to that the upper median line parallel for this multi-year structure and the key 618 retracement of the entire decline off that July drop down from 2013. Pretty big level. Pretty big level. On a type of spike scenario into that region, I would expect to see a nice failure, at least for a near-term correctionary pullback. If it breaks, honestly, this thing has some serious legs. 81.60 would sort of be the first level to look at. I know that might not seem a lot to you, 100 pips, but in sterling pips, it certainly does represent a lot. So I don't have anything on this yet. I think it might not be quite ready to operate on, but I am looking broadly for some peaking, more turning, or more evidence rather that we're putting in a near-term high here on euro pound for a pullback to the downside. And it certainly looks similar to what we're seeing with the euro dollar, looking kind of tired up here. Broader structure or broader bias is constructive, but I wouldn't be surprised to see a pullback. Same thing on the pound, which is already eyeing near-term support. Okay, so it's sort of to put things in perspective for that euro pound. Here's what the 30-minute chart looks like. Don't have anything really too interesting, which is why I really haven't stressed this. But just wanted to note, once again, just the near-term triggers you'll want to be looking at. In price. Oh, and I wanted to highlight, I forgot my train of thought, and I wanted to highlight the fact that this right now is making a very simple and clean weekly opening range. You see this? Here's the weekly open. Resistance, resistance. You make a weekly opening range here. I'm going to extend that weekly opening range to 74 to 79.45 just to account those highs that we made. Both the high that we made for the week of the 20th and the high that we made on Thursday there before the break. So you have a really well-defined weekly opening range just below resistance. These will tend to be good setups when they finally break. All right. Bear with me one moment. Okay. Amir with a question here. Sorry, says, why yen is so strong while they're on negative rate strategy? So the yen specifically today, I guess there were some comments. I was reading this earlier. Let me see if I can find them for you. There were some comments that the prime minister made, or the chief cabinet secretary. Hold on one sec. Amir, and basically what they're saying. Okay, here it is. The currency briefly paired gains after Japanese chief cabinet secretary, I'm going to kill this name, Yoshihide Suga, said the government is keeping an eye on the movements in the foreign exchange markets. So look, basically at the end of the day, they're jawboning again, and they've been talking about the fact that the sheer strength of the move, or the sheer quickness of the moves that they're seeing in the yen, is the major problem. It's not necessarily that it's too strong or too weak. Obviously, a weaker yen is going to be in their favor. It's the magnitude and the sharpness of the move. So the fact that they're shifting their focus back on the exchange rate really has people sort of playing that game with the yen again, right? And betting against the central bank, which has continued to do everything that it can to curb this appreciation in the yen that we're seeing. But markets are kind of pushing their luck, right? And Amir, if we start following the headlines and the titles and the comments and the bank rhetoric, you're going to just be chasing all day long. So, these things just coincide with triggers on when they can trigger the next move in price. But the technicals are really what's guiding everything. Okay, the levels we want to be looking at, the broader biases that we're holding, these events, these comments are simple triggers for near-term volatility. He says, just a thought. Yeah, so I think there's some comments that came out in overnight trade. That chief cabinet secretary really shaking things up. Anytime they'll mention that they're looking at the exchange rate, tracking the exchange rate, or there's sudden moves in the exchange rate, anytime they're talking about that, the markets will react rather violently because the BOJ is known to be an intervener, as it were, in the markets. Graham says maybe yen only government with no ministers invested in Panama. Possibly. Couldn't even tell you. Okay, British pound, British cat. Okay, guys, that's everything on my end. My list is clear here. If you have any other questions, feel free to throw them on the message board now before we wrap up. Again, as far as event risk is concerned, you do have some stuff on tap later today, namely the ISM PMI composite. This for the services and just the composite PMI. This is the market read. The final read for March is not going to necessarily be a major market mover unless there's a deviation. We are expecting an upward revision of 0.2. No expectation for the composite PMI, but looking ahead into the week, it's really going to be light on data here in the U.S. Tomorrow you do get the minutes from the latest FOMC policy decision. I don't necessarily think it's going to be a major mover, guys, especially because the last policy decision was a quarterly projection. So we got all the updated interest rate expectations, inflation expectations. So unless there's some surprise rhetoric, I don't necessarily think we'll get too much on tomorrow's FOMC minutes. Amir says, if we still have time, worth a look at Kiwi. So I haven't been tracking Kiwis closely. I know that Jamie's still sort of a fan of what that's doing. Here's the Kiwi on the daily chart. And basically the break that we saw yesterday kind of changed things for me. Remember, that purple line that you're looking at there is the yearly open. So we're back below the yearly open. Momentum held 60 again for a second consecutive month. Let me just fix this trigger to the new low. Wow, that held. You guys remember that? I think we put that on the webinar yesterday. I didn't think it was still going to be in play today. Wow. Okay, so real near-term tight descending ML formation just off of last week's high seems to be curbing this pretty nicely. Yeah, I don't really have a very strong opinion on the Kiwi Amir. I do like it lower. I think you see a rebound from here again. Divergence into the low. I would have loved to see a dip into this key region here. Didn't quite get it. Bottom line. Yeah, the levels are just messy. Bottom line, if we get back above the median line here, I would actually be interested in playing a possible long exposure towards the upper median line parallel. In that scenario that we do break above the median line again, tack on a quick retracement off the highs here. And again, a basic 236 takes you into 68, and a 38.2 would take you up into this region, sort of like over here. Now, again, I don't have any justification whatsoever, guys, to work with this retracement. I'm just saying as a hypothetical, if we do clear the upper median line parallel, those are the levels I'd be looking at. And certainly that 38.2 matches really well with the upper median line parallel. Let's see if we got a trigger here. Not a bad topside trigger either. All right, so feel free to take a quick snapshot of that. Eileen, yeah, and divergence. Yep, Eileen caught it too. Amir, take a snapshot of that if you need it for future reference. But that's what I'd be looking at real near term. I would expect to be seeing some near term recovery, if not a jackknife into that support one more time before moving higher. Just because we're still below this, the momentum is still rather bearish here, despite the fact that we're getting some divergence. Thanks, Mike. This was helpful. Cheers, Amir. That's our goal. Good seeing the room as always. Pete, Euro dollar, real quick. Listen, the euro, I don't have anything near term. The daily chart looks like this. Um, uh, Pete, here's what the daily chart looks like. These levels all represent major key reversal high day and low day closes. So what you're looking at here is the high day close back from May. We just failed ahead of that. What we're looking at here is the reversal high day close from October. We're below that. That's near-term resistance at this point. The high day close from February is right here at 113.20. Major key supports not till 112.56, 112.63. So, key levels to keep in mind. Remember, it's not just about knowing the bias and having the levels, guys, but it's about the entry and exit and having a strategy for a setup. I don't have anything here on the euro. In fact, if you look at the euro near term, it's just simply, in my mind, setting up a decent weekly opening range. We kind of failed to close below it or push below it yesterday. Here's the opening range high for the week. It's still early in the month. The April opening range essentially is Friday's trade session. Okay, so the monthly opening range is basically Friday's range. Here's your monthly open. And we're likely to see some more back and forth here, I think, before you get any kind of definitive action here on the euro. So know where we want to be focusing our energies, guys. And where we want to be focusing our energies is always going to be what has the clearest technical setup and the cleanest levels. And I just don't think right now euro is necessarily there. This is what I'm working with as far as structure off the lows. Okay, it's a modified pitchfork to just mirror that basic trendline support. So that would highlight a near-term support right around this region, 113.20, which is the same thing, again, that you're looking at here. Make sense, Pete? Hoping to go long at fib support. Yeah, I mean, hey, if we get that pullback, I'd love that too. Remember, this has been a pretty long structure for multiple months that has held and made some really nice pivots. So yeah, that's former resistance, a big fib confluence. If we pull back into that fib support, yeah, sure, I think that'd be a great entry. Right on. Make sense, Pete? Eileen says, thanks for all the points. See you tomorrow. Yes, always helpful. Cheers, Pete. You're more than welcome, my man. I appreciate that. Guys, we'll wrap it up here. We're over on time. I got to run. But as always, I will see you tomorrow morning, 8:30 Eastern. We'll do this over again. We'll give you an update tonight if there's anything new to look at. But again, stay nimble. We're just starting off the week. Things are starting to pan out. Keep those Aussie crosses in focus. I really do think we'll get some nice plays on those. And the CAD crosses are going to be, at least for me, my focus heading into the U.S. trade session. See you guys all tomorrow. Best luck trading. Cheers.